All right, it is Sunday night. What's up, everybody? This is Taurus. We're going to go through Fibonacci retracements and specifically the way that I do them, because I do them a little bit differently. But all right, so I'm just going to walk you guys through kind of the agenda real quick. Should be no longer than like a 20-minute video. I tend to talk a little bit though, so we'll see where we go. But all right, so basically what I'm going to do, I'm going to walk you guys through just the basics, what they are, and how generally they're done, and then I'll kind of go through. I have 4 specific examples for you guys of how to apply them the way that I do, and kind of what I use them for and what I look for within the fibs. So just a general basic knowledge of fibs, nice foundation here. Essentially, what Fibonacci levels are their ratios. So they're derived from just very basic math. It's you divide one number by the number next to it, and it gives you the next number kind of thing. And they're just ratios that seem to be very prevalent throughout nature and a bunch of different things. So they found their way into the stock market world, and people have been using Fibonacci retracements to somewhat accurately predict pullbacks and price targets and stuff like that for quite some time. Um, Generally, the normal way, and when I say normal, like the way that you'll read about it on Investopedia and stuff like that, is you'll take them from a bottom to a top if you're looking for support regions on pullbacks, and you'll start your fib up top and take it down low if you're looking for resistance levels on reversals in a downtrend. So if a stock's downtrending and then it kind of gives you a dead cat bounce and you want to know where that ends, then you would pull your fib from where the downtrend started to the the trough, the very low of the downtrend. So kind of the way that I do them is a little bit different. I look at the lines, the levels, as just that. Whether you're drawing them from bottom to top or top to bottom. I just like to look at each individual fib as a key level. So it could be support, it could be resistance. It's just an important level to me. That's really all the way I look at it. I don't like getting put into one basket or another because I can use these fibs, and you'll see by the end of this video that you can use these fibs kind of however you see fit. It's really more of an art than a science. So with that, let's get right into my specific setup. This is TradingView. I'm using this just to be able to teach you guys well. On the right side here, you have a volume profile. This orange line is the volume point of control. I'm not going to really go into what that is because that's not really the point of this video. But if you do have any questions about that, you can reach out to me. More than happy to explain it. And you can also talk to anybody else on the staff. So I have that right here. And then this light blue is actually the fib retracement and all these annotations. So let's get right into it. This stock is STEM Incorporated, ticker is STEM. And I'm looking at the daily candles here. So what I did is I took this from the beginning of this uptrend. So when it gapped up, I took it from the bottom of that wick and I took it all the way to the top of that peak. So this is the uptrend peak, right? Okay, so now what we're trying to do is we've noticed that the stock has come down from that peak, and we're trying to find a good entry point for us to essentially swing it, right? Either to new highs or just a minor swing within its frame that it already has, essentially. So I like to start from what I call known position to a known position. So either a known low or a known high. And what I mean by that is I like to see confirmation that that is in fact either a low or a high before I use it, right? You can be a little bit more aggressive with your fibs and try to time it. So like for example, if you're at this candle right here and you haven't seen the next candle, if you think this is the high, you can still fib it and see what happens. But I just like to see that confirmation because there's a less likelihood, there's a lower likelihood that my fib gets invalidated. And by invalidated, I mean, it breaks higher than the higher bound or it breaks lower than the lower bound wherever I'm starting. So if I'm starting on the bottom and it breaks below, that's invalidated. If I'm starting on the top and it breaks above, then that's invalidated. Okay, so right into it, let's get into this specific example. I'm going to turn off the moving average here, or I'm sorry, not the moving average. Actually, I'll just leave it for you guys. Okay, so I annotated this. Essentially what I do is I look for, once I put the fib, okay, I look for key levels. So looking at this chart, a lot of these key levels, actually, in fact, all of the fib levels are being somewhat respected. So I'm going to leave them all on here. Generally, what I like to do, just to clean up the chart a little bit, you'll see this in the next couple of examples. But generally what I like to do is kind of clean up the chart by taking a couple of those key levels that aren't really being respected off. So there's just a lot less chaos that you're looking at. But so what we're looking for here is we're looking for a confirmed bounce within what I like to call the load zone. And so what the load zone is going to be is it's going to be a zone from the base to the first fib, and then you can use any support or demand lines within there to kind of create your zone. So what I did was I used this low right here. And ideally, we're looking for a bounce confirm. So what I mean by that is we either want to break above the fib, and we also want to hold that support zone that we drew. So this is kind of the load zone right here. And so when I say load zone, right, just clarification here on my terminology. I'm not talking that like you should be accumulating shares here, right? This is where I ideally want to load. So this is where I'm like paying attention the most. Okay, I'm waiting to see that confirmation. And that confirmation for me happens right on this candle that I have an arrow with, okay? Because we're breaking above and out of that load zone, and that to me is giving me confirmation that this in fact is the low of this next trend. Okay, so this is potentially where I would enter a position if I was taking a swing. Okay, and then what you do is you use those fib levels for price targets to scale out. So here I have just my general swing scale out schedule, where I do 30% at my first price target, 50 at my second, and then I'll do 10 at my last price target and hold the remaining 10% as a runner, generally with a trailing stop loss. You can use whatever risk management principles you like. I like to do a TSL about 8 to 15%. Um, and so if you look at it, the takeaway here and the takeaway from the rest that you're going to see is that a lot of these fibs are kind of scarily accurate, right? So once we get above this break here, just look at what happens. This occurs at around 20. If you wanted to, if you were using that support line, you could start to load even earlier down in like the sub 15. It got to 1580, I think. This might be a little too low. I think it only hit like 16. The low was 16 flat. So if you wanted to start loading in that 16 to 1650 range, you could. Just understand that I like to see confirmation personally that increases the likelihood of a green trade, and I'm willing to give up just a little bit of profit on the front end for it. And then you just use the fibs that you feel are respected the most as your price targets. So as you can see, price target here, there's some nice previous action around this fib, so I like that. Right here, you can see again previous action, and you're just looking for either wick off of there, a candle closer open there, and any sort of confirmation that this is a key level again. And then I use this one for the final just because this is where the gap up occurs. So once we get above this fib, I think that there should be some pressure to kind of close that gap. All right, let me take you to the second example. Crowd favorite, tattooed chef here. I'm going to just keep it exactly like this. So as you can see, you could use a fib like this, right? But what we're trying to do is we're trying to catch this move. So I'm going to use the previous known move. And so the previous known move here was from this low to this high, because that's what I know, right? Because we've seen this trend come back down, and we're trying to find a load zone that we can attack. Okay, so you see it come down. I also added this demand zone here. And this is really what I'm looking for. Okay, again, not trying to snipe the bottom, not trying to perfectly time a trade, just looking for that confirmation to increase the likelihood of a green trade, right? It's not about how much money you make, it's about how little money you lose. Think about that. Consistency is key, all right? And so you can see the volume point of control is there. And so this candle right here, let me get the arrow real quick. So this candle right here, oh, did it backwards. That candle right there, that is where we're attacking. Okay, so we get above the point of control, and we also have confirmation within the load zone of a bounce, okay, because it bounced off that support, which is where these two previously closed. That candle closed and opened there, and then it bounced nicely. So that is this one. Then you can use this fib. I really like this fib as well because that's currently where you see some confluence of the moving averages as well as previous action, and then previous action here as well. So think about this, rationally here. It looks like Tattooed Chef is gonna maybe pull back to this first fib, but if you had been trading right here, right, you'd be 80% of the 80% out of your position right here. So you can afford to see it trickle here and maybe take next leg up, just because you've been proactive about your scaling out. That's one of the things I love about these fibs. Okay, I'm gonna go ahead now to a previous example. This is actually not a live example. This is a back test that I used, but it's just such a perfect example that I wanted to throw it in here as well. Um, so this is Microvision, and this was in May. If you guys look here, or actually, I'm sorry, April. This was when it actually went parabolic to, I think it was $33, $34. It might have even gone higher than that. So this is a little bit old, but just wanted to put it in here because it's very, very, very well respected chart in terms of the fibs. So essentially, if you look over here, I made a note. I didn't take off the extra fibs. We'll do that in the next example that we're actually going to do live. But right now, just looking at it, we like these three fibs. So the 23.6, the 38.2, which is right here, and the 61.8. Okay, and if you look at those, the 23.6, there's previous action here, lots of consolidation, and lots of consolidation. The 38.2 was a nice support here, nice leg up here, support, a little bit of a support before it broke, and then some consolidation again. And then the 61.8 has been kind of the historical strong resistance point on previous bounces. And then, this is actually what ended up breaking, and it sent it into the 30s. As you can see, that was a very strong resistance. So I'm not surprised that it kind of ripped afterwards. But so as you can see, we're mainly looking for this one here. It would have been on the third trade. You could have been aggressive and tried to time it there on the first trade, but like I said, we are looking for that confirmation, that bounce confirmation. So as you can see, very nice descending wedge here. Lots of tension building, consolidating tightly here, winding tightly within the load zone. And as soon as it breaks out of that load zone, that's where you want to take that trade. And then look at this. Just look at how beautifully it follows the fibs. Okay, so it gets next leg up on price target 1, price target 2, scale out just to de-risk a little bit there. And then right there, boom, just historical hard resistance. We're going to take our last scale. And on this position, you still get to eat a little bit off the pie as it runs past 30 with about 10% of your position. And again, the key here is, we're not trying to make a bunch of money every single time. Obviously, we want to make a lot of money, but you want to make the most amount of money you can while managing that risk. And so looking at this chart, there is no reasonable way you could have predicted that this would have popped and gone to 30 plus. So it's just always wise to lock in those profits, realize those gains, and then, play with the free money and see what it does afterwards. All right, so now we're gonna do this one live. This is kind of a hot stock right now. EVs are kind of coming back. I think we're gonna have a hot week for them. My eyes are on Fisker and XPEV as well. And I think that Neo will be kind of like the front runner that'll push those forward. So what we're gonna do is we're actually gonna chart this right out the gate. I'm going to use Alt F just to pull up the fib, but if you wanted to do it on the side here, you just go to this one, you click the drop down, and then, oh, I'm sorry, it's in here, this drop down right here. Okay, so I'm gonna go from the bottom of this run up. The reason why I chose this particular candle is because this is where, obviously this is an uptrend, right? But this is where you start to see the real bullish sentiment, right? This is the gap up, and now you start to see these nice green candles. So that's where, you know, I want to start the fib. Then we're just going to look at it. Okay, we're going to look at it. We're going to determine what key levels we like. So obviously right here, this is a nice level. We see some, you know, next leg up support here, wick around here, and then also around here. And the key thing to understand, right, is that, see this fib, it's not perfectly accurate, right? That's about, it's about $1. Yeah, about $1 off, but it gives you a good idea, right? And when you're playing with a $33 stock, you know, that's about a 3% leeway. That's hardly not that bad. So what we're gonna do here is we're essentially gonna find a couple of levels to clean this up. So for example, looking at it right now, the 38.2, I mean, I'm just not really seeing too much there. There might be a little bit here, so maybe we keep it. But I really do like this 23.6. I really do like that. A lot of action around it. It was a previous resistance there before it was broken on the gap up here. And so I think I'm going to keep all of them except for, let's go ahead and actually get rid of this 38 too. Okay, so I'm going to go into the fib, just clean it up. We're going to get rid of that 38 too. And that, see, that just makes everything a little bit nicer, right? If you want to keep it, you can keep it. There's nothing wrong with keeping them. I'm just trying to clean it up and make it look a little bit nicer for you guys, right? So the load zone here is going to be the, you know, anywhere from here to around this previous fib, and you want to use some support areas as well. So let's get that support area right around here in this wick, okay? So we're realistically looking for a load zone. It's going to be a big load zone, so I'm actually going to make it a little bit smaller and use the support here around this fib. So I'm going to use this previous support here. Okay, so here and here around this fib. So we're going to have a pretty tight load zone here. It's going to look like this. Let me make that yellow. Let me clean that up real quick. Okay, so that's going to be our load zone right there. Okay, so what we're looking for is we're going to look for a bounce confirm on that load zone. And as you can see, the stock comes down here. It actually gets down a little bit lower than the low zone, okay? But that's why we don't enter it right there, okay? That's why we don't enter it right here. That's why we wait. We watch, we zoom out, we see the bigger picture, okay? And then I would say personally, this is the candle right here. I don't know why I keep drawing these backwards. My apologies. That is the candle right there that, to me personally, signifies a nice move there, a nice confirmation. If you wanted to, you could use a little bit earlier in the candle, but that's definitely the candle. And so then all you're doing is you're going to pick your price targets. So price target 1 would probably be, let's see, this is around $35. So, you know, you could use this if you want. That's not a very high gain. If you're trying to stay in it longer, then, you know, you can be a little bit more aggressive with these. If it's a shorter term swing, right, you can definitely use this because I think this is going to be a solid fib. There's a lot of action around it, previous support. And as we can see, we have the benefit of 2020, you know, vision in the past. It was the next leg up on the move. So let's just say, let's go ahead and say that, you know, this is, I'm sorry, this is price target 1. And then price target 2 would likely be right around here. Or if you wanted, frankly, since I think it's a bit of a longer swing, you can bring it up there. Again, it's all in your specific, what risk tolerance you want, what kind of trade you want, stuff like that. I'm generally a longer term swing guy myself, so I'd probably use this as PT1, this is PT2, and then PT3 is going to be a retest of the previous high, and then we'll hold for a break of new high with the runners. And so yeah, so that's basically it, guys. That's kind of how I do my fibs. Um, One other thing I want to note is that a lot of people say that the 61.8 fib is the most important fib, and I just think that really it depends. It's a case by case basis. If you look at this, right, 61.8 is not even on there. We got rid of it, I believe. Yeah, 61.8 was not on that one, and on this one it was our PT1. So it's definitely important, but all of the fibs are important. It just matters on which individual fibs the stock is respecting, and just take it on a case by case basis. Remember, it's an art, it's not a science. It definitely matters where you start the fib. It definitely matters which key levels you want to look at, but it can be a very, very powerful tool, and definitely something that if you're a swing trader, at least, I think it's best for swing traders. You can also use it for long term to see kind of where to average down or maybe pick up some more shares if you're trying to enter or expand your position in a company. But I definitely think it's a very, very useful tool for both swing traders and potentially long-term investors. And it should be part of your arsenal. So if you guys have any questions, thanks for sticking through. I know I went a little bit over, as I tend to, but don't hesitate to shoot me a DM or ping me in the chats, and more than happy to answer any questions you guys have. Thanks for sharing your night with me, and have a good one.